Coming up, renewable energy use rises. Is the market betting on high interest rates for longer? And artificial intelligence in 2025 for investors. All of that coming up next. Hi everyone, it's your daily 10-minute business and finance news wrap for this Thursday, the 28th of November 2024. The Australian share market rose to a 100-day high today, up 0.45%. We'll have the details with Matt Wacher from Morningstar in a few moments. But first, the Bureau of Statistics says renewable energy supplied 33% of domestic energy use in Australia, with solar the most dominant in the 2023 financial year, up 21%. Wind energy production rose 9%, although hydro fell a little. And while total residential energy end use rose following the pandemic lull, it's still below 2021 levels, despite a larger population. For more, I spoke with John Quiggin from the University of Queensland Business School. John, what does the ABS data today say about the increasing use of renewable energy by households, now providing 33% of domestic energy use?
Well, that's growing rapidly. Of course, that's electricity use, and the government's projected that we're going to reach our targets there, rising rapidly to 82% by 2030. So we're seeing that big take-up, and that's occurring both at the utility scale with large-scale wind and utility solar, and residential rooftop, where Australia is, of course, one of the leaders in the world.
Is there anything in this data released today by the ABS showing, I guess, the efficiency of energy use by households?
Yes, well, if you look at the data, it shows that we're using collectively about as much energy as we did 10 or 15 years ago. There's a lot more of us, of course, as we've been discussing, and the economy has grown since then. So we're seeing those hidden gains from energy efficiency, things like more efficient light bulbs, appliances, and so forth, reflect in the fact that there hasn't been any growth in the household energy use in particular, even though, as I say, the population has grown significantly, as has output per person.
What do you think, though, this will all mean for electricity costs? Because while we know there have been rebates of late, there are still pressures there and pressures likely to come into the future.
Well, when you look at the problems we've had, a lot of them have come not so much on the generation side as with cost of distribution, and with the fact that the structure of the national electricity market isn't really well adapted to renewables-based supply. So recent reports coming out of AEMO suggest that we should see significant reductions in costs over the next 5 years or so.
And finally, what about the role of the main sources of domestic energy production? Because by far and away, black coal still leads, and 88% of it is exported.
And of course, this is the contradiction, I guess, in terms of Australian policy on climate. We're doing a great job in reducing our domestic emissions, or at least on the path to doing that. But at the same time, we're increasing our exports of in particular coal, but also trying to expand exports of gas to other countries that are also supposed to be reducing their emissions. So we're walking the walk as far as domestic use goes, not at all as far as our contribution to the global picture.
It's John Quiggin there from the University of Queensland.
Now, Market Day on the SBS On The Money podcast.
The Australian share market rose today. The S&P ASX 200 up 0.45% to 8,444. For more, I spoke with Matt Wacher, Morningstar's Chief Investment Officer. Matt, it looks like the ASX is going to hit yet another record high today. What are the factors driving shares to these record levels at the moment?
You know, I think, Ricardo, it's really market sentiment that's driving things. We've really had a risk-on environment ever since President-elect Trump got elected again early in November. And what we've seen is that, you know, his market-friendly or perceived market friendliness, you know, around corporate tax cuts and deregulation have really driven the market in the US, but here in Australia as well. Each market, you know, S&P 500 and the ASX 200 up about 4%. And it's been a pretty broad-based rally. Tech, utilities, financials, here in Australia. Consumer discretionary all up more than 7%. And actually, the only areas that have been soft, energy and materials. That's probably really on the back of Trump as well. Around the outlook for China growth. So President-elect Trump really driving markets.
I find it curious, though, that this is happening because there are still the possibility now of interest rates staying higher for longer for various reasons, but mainly inflation. Overnight US inflation data came in a bit hotter than expected. Here in Australia, we're seeing market watchers and economists continuously pushing back their expectations for a rate cut, probably through to May now, maybe even later. And there are those fears that even though Donald Trump may be good for the markets, that his tariffs on imports into the US may actually be inflationary. So what do you make of all of that?
Yeah, look, I mean, I think that's right. They certainly could be inflationary, and whether the tariffs themselves are like a one-off or not to hit to inflation, there's lots of debate around that. But to your point, even without the with Trump and being in office, inflation still remaining pretty persistent. And we, as you said, we saw that in the US last night, inflation ticking up a little bit. I think the Fed and the RBA, they're going to be pretty cautious in whether they cut rates more in 2025. I think they're certainly in wait and see mode now. The RBA still waiting and seeing. The US economy is actually, we saw some growth numbers out. It's actually reasonably strong, certainly relative to Australia from a growth perspective. So whether they warrant further rate cuts there is even debatable in itself. The RBA, I think they're in a little bit more of a bind with a few threats to the economy, including China growth. And that budget surplus seems to be eaten away. So they're in a bit of a bind whether they can cut rates. If growth falls away, they probably have to. But we could also make a case, that you're not going to see any rate cuts at all in 2025. So hedging my bets there, but it's a bit either way. It's a narrow path for them.
Okay, since you've already opened the crystal ball when you're talking about 2025, how will next year be different to 2024 for investors?
The toughest question. Look, I think that we're going to continue to see a bit of a market rotation. We saw patches of that, but then again, the large cap tech stocks seem to keep driving us forward anyway. Even rotate a little bit away and then they come back. But I think that market rotation is going to be the theme in 2024. And what I mean by that is the market leaders, they're the big tech stocks in the US and the banks and whatnot here in Australia, or CBA in particular, they've done really well over the last couple of years. And in the US and Australia, we're generally seeing the market as a little bit overvalued. Certainly not seeing a huge fall off from the markets. We're still reasonably constructive, but they are getting expensive. And areas like, I spoke about energy and materials before in Australia. We think that they're probably the more undervalued sectors and could drive things next year. I think also both here and in the US, small caps, they underperformed for the last couple of years. The baby got thrown out with the bathwater for small caps in 2022 when there was thoughts around recession. So we think small caps can do reasonably well here in Australia and in the US. And then if we look outside, those regions, we think that areas like emerging markets, the UK even, and Europe, no one's kind of looking at those markets very much. I think that everything's going very badly. So what that means is that not much has to go right in those areas to generate pretty reasonable returns in 2025. But you got it. You need the crystal ball, and predicting things in the short term is pretty difficult. But that's how we'd see things.
And what about one of the key themes? You mentioned technology earlier, but what about the impact artificial intelligence, AI, will have on investors?
Yeah, I mean, it's a really good question because we're getting towards the pointy end. Some businesses need to start to make some money out of AI. What we've seen so far with AI is that companies like NVIDIA, we've seen up until now over the last couple of years, a company like NVIDIA, it's provided the means to power AI, and some of the big tech companies with their data centers and things like that as well. They're providing the means to power AI applications. And now I believe 2025, it'll be the start of embedding these AI applications into companies' products and services. So what you'll see, for example, AI will start to drive business models, and a company in the US like ServiceNow, it's an interesting company. it can work with other companies using their AI services, their AI applications to perform, really help companies perform end-to-end digital transformation. So on the back of that, a company like ServiceNow can start to really generate some revenue. But on the other side of that, the companies that they're working with could be anything from a retailer, a consultant, financial services companies. They can really start to use AI to increase productivity, and that can really drive some efficiencies to the bottom line of some of these companies. But let's see if that's the case in 2025. But that's where things are starting to head.
That's Matt Wacher there, the Chief Investment Officer at Morningstar. This SBS On The Money stream is provided for informational purposes only. The content in this stream should not be understood as constituting advice or a recommendation. It is not personal advice and it does not consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decision.